Scott Minerd is the Chief Investment Officer for Guggenheim Partners, and he joins us from Los Angeles. Guggenheim Partners, by the way, manages about $100 billion US in assets. So, Scott, good to have you on. So what do you do in these market conditions? What do you make of this trend? Do you cash out and run?
Well, Susan, I think having a fairly high allocation to cash right now is a prudent thing. When you look at equity markets around the world and all the uncertainty in Europe and the issues that have happened in China in the last day or two in terms of their inflation issues, I see a lot more downside risk than upside risk. But having said that, given how hard the sell-off has been, at some point in time, it's going to be a good time to enter and to buy some equities here. But again, my view is this is going to be a trading rally that we get probably over the next few weeks, and it'll be an opportunity to sell again. So longer term, I see some real major problems for the market. But short term, we've had a pretty hard downdraft, and we could probably see a trading opportunity in the near term.
In the near term, meaning when? In the next few weeks or so?
Yeah, exactly. I would say, look for the next week or two to establish an entry point, and then, again, use the strength from that rally to sell into it, because I do believe before we see the end of the year, we're going to have another severe downdraft given the uncertainty in Europe.
Yeah, let's talk about the severity in Europe right now. What do you think of what's going on in Greece? I mean, will Papandreou survive? Do the markets need him to survive right now?
Well, I think Papandreou is probably not going to survive in the long run. I think, however, the European Union has a strong commitment to making sure that Greece does not hit the wall. And the fact of the matter is that we do know that a financial restructuring with the position the ECB has taken is likely to lead to a banking crisis in Europe. We saw the rating agencies today come out and announce that they were putting the French banks under review for downgrade. The bottom line is that a default on the part of Europe or a restructuring on the part of Europe, on the part of Greece, is going to end up being the Lehman event for Europe. And the question is, will the policymakers decide to push this to the brink and let it go, as we did with Lehman Brothers, or will they recognize that the crisis will, in fact, create a major financial crisis and in some way, shape, or form avert the collapse? And that
Scott,
is the
you're
tough
using words
question in
like
Europe.
Banking crisis, Europe's Lehman event. I mean, that doesn't sound positive for the markets, but yet you're calling this decade pretty good for buying into stocks.
Well, I think the view I have is that over the next 10 years, this will be a great opportunity to own stocks. The reason will be because bond yields are so low, especially here in the United States, that stocks look relatively cheap to bonds. And I would expect that over the next 10 years, we would see a 6 to 9% annual return. And that's why I would look for, weakness later in the year as an opportunity to enter the equity market. If you're a trader, I guess you look for an entry point in the next week or two. But again, I think a long-term investor will get a better shot before the end of the year.
Okay, let's talk about slowing U.S. growth as well, because you want to couple that with the crisis taking place in Europe. I mean, it doesn't seem like it's a good time to be buying in and going long on shares. What do you think about the U.S.? Is this just a soft patch, or is this another sign of a slowdown?
Well, I think, Susan, what we're looking at is the supply chain interruption coming out of Japan. When we saw the events in Japan back in March, we recognized that the first impact was going to be that the destruction of all the infrastructure in Japan would make it very hard for the supply chain to remain intact. In the United States right now, auto inventories have gotten very lean. That's what's caused a lot of the data to show the slowdown in auto sales. That supported the CPI number we got today, which showed an increase above expectations on CPI. Because autos are so lean, there's very little discounting. But when you look forward at the production schedule for the auto industry going into July, Ward's has announced that there's going to be a major resurgence in auto production in the United States as the supply chain comes online. And the auto piece of the equation is just one example of what's going on here. And then, of course, as the year progresses, there are going to be huge demands out of Japan to rebuild its infrastructure, which I think the United States is going to benefit from. So I think this is a pause. It's a frightening pause, given QE2's entering, but it's a pause, not a recession.
Not a recession. Okay, let me ask you one more question, Scott. Leave me with this, because you said we're going to enter a banking crisis in Europe, which might be the Lehman event for Europe. I mean, are we going to see a sort of 2008 financial crisis? When is that going to take place in this decade?
Well, Susan, I think that when you look at Europe, just as the weekend before Lehman Brothers failed, there was a lot of discussion about moral hazard in the United States. And that question was, would the United States banking, or would the U.S. government intervene and bail out Lehman? And policymakers drew the line and said, we're not going to bail out Lehman. We're going to let the market see that we're not bailing them out, and then the market will clean up the mess. The bottom line is, by that Monday morning, the world was falling apart. The question in Europe is the same. Is the European Union going to step in and come up with a permanent solution for Greece and the rest of the problem nations in Europe, or are they going to try to kick the can down the road and see if the market sort it out for them? The bottom line is, if they keep kicking the can down the road, we're going to face a disaster, and I think that's the path that we're on.
All right, Scott, thank you for sharing your thoughts today. That's Scott Minerd, Chief Investment Officer for Guggenheim Partners, joining us from Los Angeles.